All right, everybody, welcome back. We're going to go in the trenches, Scott. We're going to go to cloud computing, kind of back in the game now after being a little bit unloved. Want to start with VMware. We actually hit it yesterday, up 1% today after earnings. Operating margins also popped, saw killer growth. Is there still room to buy this stock?
Traders and investors are very happy that the cloud computing arena is back in the game. Between mobile computing and clouds, it's a lot of stocks to look at, a lot of great scenarios. And VMW woke up yesterday, and take a look at this chart. This was a powerful gap and go right back to the old highs. A lot of people bought once it took back these moving averages right here and broke this downtrend. But I think there's another trade. What I'd like to see it do is I'd like to see it go a little bit sideways ahead of yesterday's high, but then once it proves it could hold, I think you can add above 98.85 for a move well north of 100, at some point this year.
Now, what's interesting in the cloud computing space is you have VMware, which I feel like is a trade,
right.
And then I look at EMC, which owns 80% of VMware, which makes me think that that's more of a long-term investment. That's also up over 1% today. What do you think? Is that a better investment than a VMware because it's not as volatile?
Well, what the beauty of this show is we're going to teach investors how you're allowed to be in things that move well besides things that just move okay, and EMC is moving okay. If you look at the chart here, it broke out yesterday. This is one of the halves in this mega cap arena, so investors feel more comfortable holding this, but your gains are going to be muted, and I do think this goes higher, but let's also get them involved in a VMW that's more exciting, more aggressive. They should have a few of those in their portfolio besides the stocks they think they're allowed to own, like in EMC. They're allowed to own the fastest movers also.
All right, we have to go to Salesforce because I feel like that everyone loves to love it, but it had a really tough time, and it finally broke its downtrend yesterday on VMware. Can you still get in here?
Yes. My traders, again, very excited yesterday. Finally, this CRM back in the game was a great mover for us last year. This was a tradable breakout yesterday. So
is light volume a worry on that breakout from yesterday?
Not really.
Okay.
Just because we've had light volume over the course of the past year across the board. You hear it all over the place. Stocks are going up, but the volume's light. You know what? You still get paid if stocks go up on light volume, and it still hurts if you're short and they go up on light volume. But it's something to take note. More on a 52-week high breakout, that's when I'm worried. That's when I want 200, 300, 400% volume. But for here, this is the next level that this Salesforce is going to contend to. I do think this stock makes new highs in the year. This move right here puts it back on all traders' radars.
Now, let's go to two stocks that should also be on some traders and investors' radar. We're going to go to Acme Packet. Now, here, the move has been crazy parabolic. They have 62% of this market share. If you look at it, I mean, it would look scary because the move has been so strong. Why do you recommend this one?
Well, because after a strong move, this has had a nice consolidation.
Okay.
So, of course, this whole move is nice. People have made a lot of money, but look at this nice consolidation up here, showing people taking profits, but more people getting involved. So I think we have a breakout here once this gets above this 77.50, 78. It might even be there already based on these positive earnings this morning.
Let's get to some catch-up plays then. On our list yesterday for catch-up plays was F5, but then they reported a killer, insane quarter. So I have to wonder, is it still a catch-up play, or has it already broken out and should be trading with the VMware and the EMCs?
Well, this gap open puts it back in play, puts it back in the game. If you look at FFIV where it has been, it was in the gutter basically. Yesterday it seems like somebody knew something or didn't want to be short, and now it's opening up right around this area. So this will put it back on the radar. It'll take back the moving averages. I think that it has a lot of room back to these highs. I don't think it gets there quick, but F5 with this report puts it on the radar, and I think it makes it investable, but it just has to be at the right time.
Do you think this 11% that we're seeing today, is that short covering, or do you think it's actual love?
I think it's a combo. I think there are people short, and there's some new money getting back involved here.
All right, and then real quick, we got to hit Riverbed here. Reports on Monday. Can you get in before this trade, before they report?
I wouldn't get in beforehand, but I think it's somewhat safe. This is when they pre-announced good numbers. They sold it off, but I think on FFIV, the shorts will be scared. I think you can get involved. It's just not as quality as the other ones that you did mention.